From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's exchanges and clearinghouses around the world. And now welcome inside the Ice House.
Today we are bringing you a special episode recorded in the middle of ICE Mortgage Technology Experience Conference. And I do mean literally. We are in a glass room dropped in the center of the exhibition hall, surrounded by the people and companies that are leading the transformation of one of the oldest financial transactions, buying a home. Attendees, participants, and vendors have all descended on experience in Las Vegas, Nevada to swap ideas, share their latest inventions, and catch up with industry peers and colleagues after 2 years of separation. And it gives us an opportunity to connect with and speak to some of the titans that are reshaping the mortgage technology world. Joining us in this fishbowl today is one of those leaders, Paramount Residential Mortgage Group, or PRMG's Chief Lending Officer, Kevin Peranio. His weekly video updates have become a must-watch for industry insiders and anyone wanting to understand how the economy and global affairs are impacting the industry. Our conversation with Kevin on his experience at Experience, his career, and what we all need to know about financing real estate is coming up right after this.
Connecting the opportunity is just part of the hustle.
Opportunity is using data to create a competitive advantage.
It's raising capital to help companies change the world.
It's making complicated financial concepts seem simple.
Opportunity is making the dream of home ownership a reality.
Writing new rules and redefining the game.
And driving the world forward to a greener energy future.
Opportunity is setting a goal
and charting a course to get there.
Sometimes the only thing standing between you and opportunity is someone who can make the connection.
At ICE, we connect people to opportunity.
Our guest today, Kevin Peranio, is the Chief Lending Officer of PRMG. His mortgage career began with leadership roles at North Star Lending and First Magnus Financial, and before that he spent 2 years with Dell Computer. Welcome, Kevin, inside the Ice House.
Thank you, brother. I appreciate it.
So this is the first time Experience has been in person since ICE acquired Ellie Mae. How has it stacked up to past ones?
There's a huge buzz. You can feel the energy. Everyone's excited to be out in person, live, right here together in a gorgeous venue. And do many companies do it more professionally or better than this team right here? And now part of a larger team with ICE. I mean, it's really, really well done. And the vibe here is super positive.
I was just watching your video update from Experience. You've been on the road a lot, but last Friday you recorded a special video after a round of golf.
Yeah.
Is that your new process for getting ready for a video? And have you gotten the feedback you've been missing on those late week updates?
You know, it's funny. I've been putting LinkedIn videos out for several years. And, you know, when the pandemic happened about 2 years ago at this point, you know, even industry veterans were unclear of what was happening. What was the CARES Act? Why do we have all these margin calls? You've got loan officers that are pretty new in the business. They're looking at their rate sheet and they're seeing zeros on the rate sheet. Like, oh my gosh, I can't even lock loans. Non-QM loans in process, just dead instantly. You know, I've been in the business about 21 years and I just felt like kind of stepping up my LinkedIn game and, you know, instead of just doing from the road or from a conference, maybe do 2 or 3 videos a week. Try and calm some nerves, create a collective community. And, you know, LinkedIn's pretty good for that. And just try and serve everybody. You know, there was a lot of uncertainty, a lot of unknowns. Not just, you know, within our industry, but from a health pandemic standpoint. Gosh, what's going on with school and our families and our kids? And so, you know, I strive to be a humble servant leader. That was my motivation for putting stuff out. But, you know, I like to have fun too. You know, it's a fun business, right? This is a fun show. There's fun things going on. Sometimes, you know, you gotta have some work-life balance. And so occasionally some of my videos will be some from cool spots, fun places, and me just kind of letting loose and just being as authentic and genuine as I can be.
And you mentioned you really got into it during the pandemic, a lot of uncertainty. And I heard at first some of your fellow management over at PRMG were worrying about the optics of their chief lending officer posting videos at 1 a.m. What's a typical day like for you? And are you always up at that time?
You know, our company was founded by Paul Rozo, our CEO, and then Robert Holliday, our COO, over 21 years now. You know, I'm 45, they're in their mid-50s, mid to late 50s, and they see how hard I grind and how hard I work. And they worry about my work-life balance. They truly care for me. You know, they want me to go home and be with my family. And, you know, and I get it. You know, I try. You know, I try really hard. But I'm also really motivated and inspired about this business and my work and my team and this community we built and this industry. And I feel like there's just so many people to serve and so many people to help lift up. And so there aren't enough hours in the day. I don't sleep a lot. I've got the Whoop band and the data to prove it. You know, I can show you my sleeping habits. It's pretty terrible. But my typical day is, you know, I'm usually up in the morning when the market's open. I like to see what's going on with the stock markets. I like to read a lot of subscription services that I pay for personally. I use some of that information knowledge to kind of infuse with what's going on with housing. Because, you know, we all get the same, you know, trade industry magazines. We see a lot of the data points. And I try and bring an outside perspective on just business in general, on some macro things that people don't talk about. Did you know that the nickel commodities market is exploding right now? Does that matter to anyone in housing? I don't know. Maybe it does. It's just one more data point, one more sign that prices are rising, inflation is rising. You know, electric vehicles are on the rise. Nickel is a big part of the batteries and those systems. And so, you know, there's just a lot of stuff to talk about that impacts ultimately, you know, is now the right time for a consumer to buy? Most consumers who are first-time home buyers, you know, they're 33. So they're worried about what's going on. They harken back to 07, 08. I spend a lot of my time in the morning, you know, reading subscription services, seeing what's going on with the market, making sure I'm caught up on emails. I have meetings that start every day at 8 or 8:30 every day. Multiple meetings, demos, conferences, calls, you know, but we have 4 kids. So our kids are young. Our oldest just turned 9. So I got a 3rd grader and a 1st grader. So, you know, I'm present, I'm there, I help. We shuffle them out the door. I'm still working. And then I kind of make my way into the office anywhere between 11 a.m. and 1 p.m. West Coast. I live in Newport Beach. I move into my office in Corona, and then I'm there for another 12 hours. That's my Monday through Thursday. Friday, I typically don't have as heavy a day. I try and do something relaxing at the end of the day, at the very end of the day. Friday's on the West Coast for a 2,700 person employed company. My West Coast end of the day starts to lighten up because we're going, you know, 6 a.m. for me is 9 a.m. East Coast. So there's stuff going on all day. That's my typical day, except 50% of the year I'm on the road. 50%. So I'm at trade shows and conferences. I'm beating the streets. I'm trying to see what's going on. So I think as a partner, as an owner, a shareholder, and a lender that's a 3-channel lender with 2,700 employees, and given my day that I just described and what I do and where I get my information, I think my perspective is somewhat unique. And so I love sharing it with other people, and I love helping other people. I've never really thought of how to monetize it. I don't overtly recruit. You know, I'm truly just trying to give. And I think that's what we all do every day. I hope that comes through and inspires other people, and then I can learn and be better every day myself.
You went to school for business and communications as opposed to mortgage. So how do you get from going to college in Austin to the mortgage industry? Where did that inspiration come from?
Well, I'm born and raised in Dallas, and I went to school in University of Texas at Austin and hung around Austin a few years after school, and I worked for Dell Computers for a little bit. You know, when you'd call the 800 number, dude, you're getting a Dell. You know, you see those commercials for those that remember back in the day. I'm selling computers starting at $2,000 a box, right? You know, I was like top 30 out of 800 plus, won all the trips, would go to all the things, had number 1 in close rate because I like taking my time with clients. I'm not like a slammer type salesperson. I like taking my time. As those of you listening will see, I'm very thorough when I talk, which puts some people to sleep, but some people enjoy the detail. Then about 18 months in, Dell and the computer industry is kind of going through what I think our industry is going through right now. It was a really interesting lesson to learn at age 22, 23. When you're the leader, like Michael Dell was in Dell Computers and that team, why have all this competition? They had the operating leverage. They had the systems. They had the assembly line of how to produce their widget, right? Which we produce widgets in our business. So they stepped on the price. And I remember when I left there, starting price was $499 for a complete computer. They were there to squeeze out their competition, and they ultimately did. And we're in kind of a down cycle right now in our industry, here in the winter, about to be spring of 22. I think that's coming. I think it's been coming. I think, you see the billions of dollars in fintech surrounding our industry. Encompass is a perfect example of that. $11-12 billion valuation. The strong are going to get very strong, and they're in a time right now in this industry where there's less business. It's less profitable per loan. It might be more competitive and harder to get those loans. And so that experience from Dell really resonates over to here. But before I make all that leap, I wanted to make money. Even at 22, 23, I got spoiled. In Austin, Texas, $107,000 at age 23 in a year goes a long way. When they started cutting the price of the widgets, so did everyone's comp, which is something that happens in our industry too. So a buddy of mine, one of my best friends, Matt Fankhauser, actually pretty high up at SoFi running their mortgage lending team. He had just started at First Magnus. He's like, dude, you will love being a wholesale account executive. You're dealing with B2B clients. You're dealing with wholesale brokers. They own their own business. They're entrepreneurs. They're trying to grow. We help them. We're in the middle. And bam, that's it. I got hooked, and I started with First Magnus in April of 01 and just been climbing the ranks and, had my own company in between First Magnus, North Star Lending, and then I joined Paul and Robert's team almost 11 and a half years ago. Privately owned company, fantastically run. They had no presence east of the Mississippi. Brought my team out there, and then 6 years ago, they made me their partner. So I moved my family to California. We took on another partner, Gary Malice, who's an industry titan in his own right by all accords. We have a very solid ownership team, plus our senior management, just chock full of experienced people. And here we are. That's how it all came to be.
And you mentioned the impact that with ICE acquiring Ellie Mae and Jeff Sprecher, and Jeff's career has been doing exactly what you're saying, seeing inefficiencies in the market, bringing in a tech solution. But also, and he touched on this a little bit in his talk here, is he also gave significant ownership to companies and people that he knew would help him take the company to the next level. How did you meet Paul and Robert, and then you and Gary become those missing links to make PRMG grow to, I think you said 2,700 employees today?
Well, to speak to Jeff, I had a chance to sit with him, have lunch with him at the Executive Summit on Monday, spend some time talking with him Sunday evening at dinner. What an empowering, enabling leader. Totally down to earth. I mean, just being open and honest and talking about challenges that we face in business and personally, and just a straight shooter. At the end of the day, kind of cut through all the BS and just talk. What do we need to do to solve problems here? A lot of people don't know, like Intercontinental Exchange owns the New York Stock Exchange. I have such an affinity for stocks and business and watching how that liquidity and that, world of money flow operates. If you look at what we do, yes, we're enabling home ownership. Yes, we're solving problems. Yes, we're building our communities. And that's the part that feels really good. But the secondary market is about liquidity. And not to sound cold, heartless, and unforgiving, but we buy and sell money. So we buy and sell money in this business. We buy and sell mortgage-backed securities, which are safe haven assets, fixed income assets that are backed by the home, the collateral, and a quality investment loan in a borrower that makes their payment. This is big business. And when it comes to big business, you want to work with responsible leaders. And when I met Paul and Robert through a vice president, a gentleman named Herb Lewis, that is one of our VPs at PRMG now, a mentor, a gentleman I look up to, who has a legacy of his own, where he's got 2 sons in the business. One of them, Daniel Lewis, is our HR director. They said, this guy Kevin, his team that he built and led was the number 1 wholesale team for the last 2.5 years of First Magnus's existence, which was the preeminent privately owned lender with 3 channels prior to the crash in 07. And so I had a chance to meet Paul and Robert because of that introduction from Herb Lewis. After that introduction, I was like, these humble servant leaders are guys that can take that burden, that responsibility of building an employee base, taking care of them and their families, enabling them in their careers, being fiscally responsible, dealing with the liquidity of the money that we buy and sell, fostering the American dream. Fast forward 5 years, they make me their partner, and then fast forward about another 1.5 years, 2 years, the company I cherish so much that I first started at First Magnus, one of their owners, Gary Malice, is now my partner here. It's been a great leap to finding good leaders that you can trust, that you can count on, that you can have tough discussions, heated discussions, but iron sharpening iron. And then together we're all stronger, building our business, building our communities in this incredibly fruitful and blessed industry that we're all in.
You touched on sort of the 2 sides of the industry, right? There's the local aspect and working community and the large. And to borrow a line that I think you borrowed from a Baptist minister, How do you make sure that despite all the success that PRMG stays large enough to serve you, but small enough to know you?
Oh, I'm glad you dug that one out. Yeah. Pastor V.E. Tipton, the Southside Assembly of God in Garland, Texas. I was born and raised in Dallas, but from 1980 to, my mom still lives in our house in Garland, Texas, which is North Dallas area, right? So border of Plano, Richardson, and Garland. Went to Bertner High School in Richardson. I'm up late watching Hogan's Heroes and Get Smart and all these old shows, and there's these, old commercials, and here's this guy, this pastor, and I don't know why it just resonated with me. I must have been 8 or 7 or 9, I don't know, just hearing this quote. We are large enough to serve you, but small enough to know you. I mean, what a great mantra for anything, your church, your community, your business. You're basically saying this isn't a mom and pop shop. We're going to create enterprise level technology, integrations, financial backing, onboarding, human capital, resources. Never get complacent, continue to grow and be better every day. But we're not a hedge fund. We're not a bank. We're not so far removed that you don't know who your ownership is, who your senior leaders are. We're visible. We're leading from the front. We're serving our people. Our CEO, he made everybody read this book called Raving Fans. It's a perfect example of how we're small enough to know everybody in our company. He had an account executive in Las Vegas say, hey, Paul, I want my broker partners to be raving fans of PRMG. I want them to love us. And it's this small little 100-page book on customer service. So Paul read it, had this epiphany, and about 5 years ago, he basically made all of our different departments in the corporate office read this book and basically give him, our CEO and founder, a book report in the boardroom. And what he said is, in the book, I'll give you the cliff notes here, +1 service every day will give you 365% extra effort all year. How do you define your customer? When you ask your customer, hey, how are things going? They're like, oh, it's good. That's not a raving fan. You want them to go, they're great. I love PRMG. I love it here. I love my leadership. I love this, and this. That's a raving fan. So he defined our customer in the wholesale and correspondent channel as the account executive. In our retail channel, he defined it as the originator and the branch manager. It's not the builder. It's not the borrower. It's not the realtor. The expert are the originators out there in all 3 channels. The expert in the wholesale and correspondent space are the account executives. They're the toughest critics because they have to deal with everything. If you make them a raving fan, well, of course, the borrowers and the builders and the realtors will be happy, right? So he made marketing, payroll, finance, HR, you name it, secondary, each department. Read the book, report to him, one at a time, each person get up and say, how are you going to make a raving fan out of our client who we serve, which is those employees. I had an account executive start here a couple days ago, and she said, hey, boss. I said, no, I'm not the boss. Don't call me boss. You're the boss. You're our client. I'm here to serve you. We live and breathe that every day.
We're recording this. It's Women's History Month. We'll be releasing this during Financial Literacy Month. In an episode of the Clear Close podcast you appeared on, you said something, and I'm going to paraphrase you, that being an equal opportunity employer is just as important as being an equal opportunity lender. Can you expand on that and explain PRMG's philosophy when it comes to diversity, equity, and inclusion?
Yes. It used to be called D&I, right? And then it's morphed into DE&I. And I love the fact that equity was added there in the middle. Diversity, equity, and inclusion. We're in the housing business, and it's a forced savings plan. Creating wealth for generations and closing the wealth gap, really the best and fastest way is through owning a home in which you gain equity. So I love the fact that equity is part of diversity, equity, and inclusion. I'm on the road all the time. I go to a lot of conferences. I get to hear a lot of people speak. I'm a very fair person. I'm actually socially moderate, even though I'm from Texas. And I think most of the country is slightly fiscally conservative, and I would say socially moderate. I think if you ask the overwhelming majority of people, that's where they land. And so being socially moderate means even if you're religious, which I am, I'm Catholic and I'm a Christian, but not being judgmental and understanding and being empathetic about where people are from. And that's just how I am. My CEO will kill me, but he's a Colombian immigrant, and he doesn't pander to that. You won't see him out there touting that he's Latino. He doesn't pander. He doesn't do it. So I'm plugging for him the fact that we are a Latino-founded company. Do we make concerted efforts to be a DE&I champion? Absolutely. I personally started the PRMG Women's Advisory Council several years ago, handed it off to the women of our company. Christine Beckwith, Vision 2020, she's fantastic. She was our first chairperson. Kristen Messerly, who's here, she's been our chairperson for a couple years. We're part of NAMBA. I'm on the board of governors for NAMBA, which is the National Association of Minority Mortgage Bankers of America. Tony Thompson is an absolute blessing to this industry. I read something, diversity, equity, inclusion, is it's not just being invited to the party, it's being asked to dance. And I love the message there. I'm on the board of Access Lending Academy with Paul Gelati and a great group of colleagues. You can see that on LinkedIn as well. They're intentional about hiring people that might not necessarily be hired in this business. And it's a huge D&I initiative that also trains people how to be good employees in our industry. So I could go down the list, and I don't want to sound like I'm pandering and be guilty of what I say we try not to do. But we live it and breathe it. Anyone that knows PRMG, they know it. It's just part of who we are.
After the break, Kevin Peranio, the Chief Lending Officer for PRMG, and I will talk about his experience at ICE Mortgage Technology Experience and what to watch across the industry. That's right after this break.
And now a word from Stellantis, NYSE ticker STLA.
Their grandfather once crashed an auto show by driving through a plate glass window on purpose. Their father was the most awarded SUV ever. And their crazy uncle raced sports cars and won. And while the blood of their relatives still runs true, none of them can do what these can. Introducing the next generation of Jeep Grand Cherokee. Available in 2-row, 3-row, and 4xe. The legacy lives on.
Welcome back. Before the break, Kevin Peranio, the Chief Lending Officer at PRMG, and I were discussing his career and the importance of diversity from inside the podcast booth at ICE Mortgage Technologies Experience 2022. You and I were in the room when the CEO of Superworlds gave his pitch to the room about investing in digital real estate. So as PRMG is thinking about the future, in office, out of office, are you also thinking about hanging a digital shingle out there and get into the digital world?
Well, I am, because I love that stuff. I'm that guy that tries to bring some forward thinking to our senior management. And that's not to say that there aren't others that are thinking about it. But your traditional mortgage lender probably has an established team, and we got people on our board that aren't even on Facebook, right? And now they just rebranded Meta. Harish was one of the guest speakers at the Executive Summit of Superworld, and it was very fascinating. It did have my gears turning. The metaverse is like all of it, right? It's like kind of the all-encompassing name for everything, right? Then there's like completely virtual worlds, like Sandbox, where everything is in that platform, in that system. What I liked about Superworld was it was a virtual world laid on top of the real world, which, I think is kind of an easy transition for even someone right now that's very skeptical of it. People are still skeptical of cryptocurrency, which is just a blockchain ledger, which is immutable and absolutely, amazing when it comes to, encryption and security. And so people are still getting their hands around that, which is only 11 plus years old, So now they gotta get their hands around the metaverse and this virtual world. But, when Facebook came out, to quote Gary Vaynerchuk, Gary V, he's like, 50-year-olds, scoffed at Facebook. Now it's only 50-year-olds, you know what I mean? So it's funny, and I'm not age shaming here, but I'm just saying, there are early adopters to technology, and then everyone kind of comes along. Will the metaverse as a whole be mainstream? Yeah, for sure. Who will the winners be? Will Superworld be the Facebook of that part of the metaverse? I mean, I live in Newport Beach. I was thinking, maybe I'll go buy real estate in the area and buy my own house. What if 5 years from now I log into Superworld and I see that some other dude owns my house, and then I put on the virtual AR, VR, glasses or goggles, or use my phone or whatever it is, and I look and someone has graffitied the front of my house in the virtual Superworld. I'd be pissed off, So, maybe I got to buy all my properties, right? So, and that's not even thinking about being violated by what you own. But, then there's certainly going to be money made in there. Just look at our kids who play video games and spend money in the video games to buy the hyped up weapon. They're going to go to these virtual worlds. They're going to go to the metaverse. They're going to be buying stuff to, hang out in there. Will everyone on the planet completely replace their real life with a second virtual life? No. But almost everyone on the planet has a smartphone. So our lives are enhanced with our smartphone. So why wouldn't there be some enhancement in the metaverse in some way that resonates. And it's not going to be the same for everybody. But I can certainly see people putting their eyeballs on screens, and it might have something to do with certain areas of the metaverse. And Superworld was a very cool concept, and it was pretty awesome that ICE put them on to speak, at this conference.
And one of the things in the full section that Joe talked about is this kind of 1% incremental change over time, right? So we're not going to go from buying our house the old way to going into the metaverse tomorrow. But, when you think about incremental change, one of the big changes that's happened in our time since the last experience was here was Ellie Mae, Simplifile, and MERS, all slowly acquired by Jeff Sprecher, by ICE, relaunched as ICE Mortgage Technology. As a client, what has been the benefit of that combination? And what's your reaction when you first hear that news?
It was like a complete validation of something that I've actually been saying for a couple years. MERS, it's basically an electronic registration system. There's no competition. It's a complete monopoly, right? When I watched the way that business was built, every loan gets registered when it becomes a completed funding of collateral. And it's a data point. It's a record. And it's the standard. It's the standard in our industry. And I remember saying they did a price reduction somewhere along the way. And I said, what a brilliant move. Why allow your competition to come in? The barrier to entry in that space of electronic registry of loans, of property, of collateral, it's so high that no one's going to come in and do it. It's like saying, let's add a 27th letter to the alphabet, or let's change the order of our alphabet. It's not going to happen. It is a protocol. It's established. It's how we roll. So then when I saw Chris Sullivan is an awesome dude, plays in a band called Wakeland. He now works at Regora, who I met at ICE Experience 3 years ago. I met Brian Zitten here, brought us together. It's now our appraisal management software partner. Chris worked at Simplifile, and I would meet him at the shows for several years prior to that. Again, I had this thought. Now, I'd seen what MERS had done, and Simplifile basically is the e-recording of deeds and trusts and promissory notes, and they went out to all the counties, 3,000 plus counties. Some of them, where Mabel is sitting there with her cigarette and a manila folder file and recording, at her own sweet will, once or twice a week. They went out, Simplifile went out to all these counties and digitized the recording of notes and deeds of trust. And I just said, here it is. This is just like MERS. What a brilliant way to monopolize this. And then I swear, like a year after having that thought, bam, 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 they're all bought in together. And I was like, oh my gosh, and I didn't know Jeff at the time. And I'm like, dude, this guy is aligning vertically monopolies. He's aligning these hard barrier to entry businesses that are staples of our industry. But it was a great thought to see it line up and just go, wow, sometimes you have an idea and then it happens, right? You got to give these guys at ICE, a lot of credit. They wanted Encompass. They wanted Ellie Mae. They wanted to align these pieces. They're 55 to 65% market share. I don't know the number for Encompass. And second place is, I don't even think even 15%. That's a validation of years of effort, years of building bridges, and to see them all lined up together was just pretty amazing.
Good investment, good for industry, aligning processes all together in one simple package. You have to tell me, but I'm sure that helps PRMG reduce costs, going to one spot. How does all this really help the end customer, the person who wants to buy that house, the person who's been saving up and now looking for their first home, or like I just did, just moving up to a little bit bigger space now that my kids are a little older?
Just know that behind the scenes there are electronic recordings and records and data points that are digitized that safeguard your asset. And for you or anyone else, the home is the largest purchase you make in your life typically. And knowing that it can be insured by title companies that that you're the owner. There's no defects on title. The process was recorded in a safe manner and an accepted manner, which makes mortgage-backed securities, again, a safe haven asset backed by collateral that is actually the collateral underneath the asset that people trade mortgage-backed securities around the world, which is a great return and a great investment vehicle. And so, not to get too far into it, but people have been talking about blockchain ledgers disrupting the title business. Now, the data that's been collected by title companies for years, they don't want to give that away. They'd rather make billions than millions. But if I knew exactly A to B to C, every single person involved in the title of this property, then there's no defect. There's no risk of my asset. So, blockchain or something like that could disrupt the title business. I'm just a bystander on that. But it's all the same thing. It's safeguarding your asset and knowing that your home is truly, truly yours.
I want to do a little side trip about technology implementation. There's an interview floating around the internet of you talking about using Pacaso to purchase your vacation home in Park City, sight unseen. Besides giving your family access to the best skiing around, was that sort of an interest in that technology? You know, part ownership in a home, buying a home unseen, and then sharing that collateral with a group of people who now can access those slopes?
I've lived in California for 6 years. I'm a Texan. I do love California, things I really love about it. And part of the thing is the convenience of getting up to Park City to ski. I love skiing. I love snowboarding. And I want my kids to have that passion and love when they're younger because, now I can make that happen for them through hard work and sacrifice. And so I've been watching properties on Newport Beach Peninsula in Park City for years. And I'm like, I want a property up there in my family's portfolio. Maybe I can hand it down to my children at some point. You're looking at Redfin. You're looking at data points. You're seeing the prices like, okay, this house is, $1.5 million. Now it's 2. Now it's 2.5. Oh my God, I'm never going to be able to afford this house. And then boom, here comes this tech-driven concept of co-ownership for second home. I happened to just be on social media and I saw a buddy of mine hashtagging Pacaso. I clicked on it and there was the very first night, the very first listing of the very first home in Park City. And it was amazing. And they buy a home and they break it up into 8 units. And I, in an LLC, together with my wife, buy an 8th. I am on title of a second home use only. They mark it up a little bit, mark it up like 12%, break it into 8ths. Turnkey, furnish it, monthly fee, offer financing through First Republic Bank. It was 50% down before. Now they offer 20% financing down on their newer homes. They're trying to get into 100 markets, and they're even international. So paying $647,000 for an 8th unit and being able to use a home 44 days a year and give my family that blessing of skiing as they're little and growing. My kids are 9 and under, all 4 of them. It opened up a door. To quote Spencer Raskoff, the CEO and founder of Zillow, and Austin Allison, who was the founder of .loop. These guys are co-founders of Pacaso. This is the democratization of second home co-ownership. So then I bought another one in Newport Beach Peninsula. Not that I'm taking 88 days of vacation a year, but I can staycation out of that beach house in part of that work from anywhere concept. I can veg out, give my children 5 houses from the sand experience, an experience I never had for an affordable entry price. It's brilliant. I love it. I can't talk enough about it.
Whether we're talking about primary or secondary homes, there's a lot of conversations going on around rates. The Fed this morning raised, I think, 25 basis points. Considering slowing growth, geopolitical events, and other issues, what do you think is going to happen with rates? You're pretty on the ball with your updates.
The 10-year is up to 220 today. The Fed just spoke today. Today is the open market meeting, and their comments were seen as more hawkish on inflation. They basically said, at our coming meetings, we're going to talk about reducing our balance sheet. And that is reducing their footprint. That is seen as less liquidity in the system. And our business is based on liquidity. Our business is based on the velocity of money. Our economy is based on the velocity of money, how much money changes hands. So if there are less buyers of mortgage-backed securities, less buyers of treasuries, if the borrowers are spending less on the economy, which our GDP is 70% consumer growth, that could be seen as a slowing of our economy. In the face of rising prices with inflation and housing supply shortages. These are some uncertain times, but the Fed brought some certainty today saying, hey, this is what we're doing, 25 basis point hike. We may have some more hikes coming up at a faster pace potentially, and we're going to reduce our balance sheet. The markets are trying to digest how to react to that. Generally, the trend is for higher rates, but if you're buying a home and you're a renter now, you pay 100% interest rate right now. If you are a renter, you pay 100% interest rate, and you're making a landlord rich, and you are missing out every day on the opportunity to create wealth on a payment you're already making because you're renting. So you've got to open a door. You got to do it now. It doesn't matter what the rate is. You have to start building your equity and paying down that forced savings plan. So it doesn't matter what rates do for purchase money. You got to get in the door. Will it impact rate and term refis? Yes, it will. But there's a lot of equity out there. So people are doing cash out refis and consolidating their debt. That's not a trend or a fad. That's just being fiscally responsible from your personal balance sheet at home.
One of the things that's an ongoing issue is these underserved communities that don't have that ability to create equity. They don't have the ability to buy homes. You spoke recently to the Mortgage Pro 411 on the impact of community investment acts and what they can have on non-banks. And on the one level, that's a great thing, investing in underserved communities. Can you explain how those acts work and how they can actually have some major risks to non-bank lenders?
So you're referring to the recently proposed liquidity requirements of non-banks and the standards to which they're held to. Remember, non-banks don't have access to the Federal Home Loan Savings Funds or the Fed funds. And again, we're talking about liquidity. So if our leadership team has to set aside more capital to meet certain requirements, that's less capital that we're using to serve the underserved. And IMBs, independent mortgage bankers, by the way, we're the ones in the community doing the tough loans. We're the ones serving the low to moderate income borrowers. We're the ones with really wide credit programs and serving those that need it. The first-time home buyers that maybe haven't been taught financial literacy, don't know about how to build their credit or their wealth or save for that down payment. Looking at liquidity and velocity of money as it relates to serving the underserved, we really need to take a look at it, because setting aside money, this isn't 08. Dodd-Frank worked. The loans that were tough, one day out of foreclosure, bankruptcy, they're now called non-QM loans, non-qualified loans. That market seized up in March and April of 20. Fannie, Freddie, Ginnie was just fine. And that was a crash recession. So Dodd-Frank work, the hype of being undercapitalized and having a crash from 07, 08, you can't think of every policy going forward that's how you have to, you have to take such an extreme stance. So I still feel there's some middle ground to also set out and serve the administration's missions, which are very much aligned with independent mortgage banks, of how to serve the low to moderate income borrowers and get more people in a home.
As we wrap up, talking about getting more people into homes, we've had kind of 2 unprecedented years of refinancing and sales. How are you seeing things sort of coalescing as things return to normal and the economy goes forward? Where is this all going?
We have a massive housing shortage, so there's just no supply. There's a wave of demographics of borrowers that are in the household formation years, age 33, and they're looking for homes. That's going to continue to be around for this year, maybe deep into next year. If the economies slow down, if there's a recession and people lose jobs, they'll start to tighten up and there'll be less buyers out there. And then the cycle will start again. Then the Fed will step in and then rates will come back and improve, because we need to provide liquidity to get our economy out of this recession. So the good news is, whether economies are good or bad, housing is a very insulated market. You're either doing refinances or you're doing purchases, regardless of what's going on in the cycle of the economy. And at the end of the day, putting someone in a home is the way to bridge the wealth gap. It is the way to create wealth. It is the way to build our communities. And we just have to continue to push forward. And I think that will always be a shining light, a shining beacon for anyone, no matter how hard or tough times get, whether you face a health pandemic, job loss, a rough time in your life. Having that bedrock foundation of a home with a roof over your head is it's a safe haven, and that's never going to change.
You've been here for 4 days, I think, if I'm doing my math correctly. You've heard from Karl Rove. You've heard from Abby Wambach. You've heard from Jeff Sprecher. When you get on that 8 a.m. call tomorrow, what's the one takeaway you're going to make sure your team gets from something you've learned here at Experience?
Well, we had one of those 8 a.m. calls already today. I had to have another one tomorrow. I said, some of these tools that we have, we're not using. And we need to think about ROI more than just in terms of dollars, but in terms of time. And technology enables us. It doesn't replace the human relationship aspect of our business. You can't replace that part of it. And a first-time homebuyer leans on us as originators to help coach them through an emotional and tough process. But leveraging technology, leveraging the tools that we have here at ICE and everything we've been talking about gives us time back. So what do you do with that time? Do you reinvest it in your business, in yourself, in your health, in your family? Think of things in ROI in terms of time, not just dollars. And how are you going to reinvest that time? Where can I save time? How can I manage that? And then be a better person in my society and in this industry. That's my big takeaway. I talked about it this morning on one of my big team meetings. I got another meeting tomorrow. I'm going to talk about it again.
Use technology to use better time. Thanks so much, Kevin, for joining us inside the Ice House.
Thank you, Peter. Appreciate it.
That's our conversation for this week. Our guest was Kevin Peranio, the Chief Lending Officer of Paramount Residential Mortgage Group, or PRMG. If you like what you heard, please rate us on iTunes so other folks know where to find us. Got a comment or question you'd like one of our experts to tackle on a future show? Email us at icehouse@ice.com or tweet at us at icehousepodcast. Our show is produced by Stefan Capril's production assistants from Ken Abel and Ian Wolf. I'm Pete Asher, host, signing off from the podcast studio at the 2022 ICE Mortgage Technology Experience. Thanks for listening. Talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.